What's good, everyone, and welcome back to the Financial Forward channel. We are on our free money glitch series number 1 on the final portion of the series talking about risk management part 1. Now, there are a few good ways to risk manage. So this is going to be a multi-part module where we look at how to have the right mindset so you'll be able to make wise choices about when and how to trade, and on using a proper system or two to enable you to grow your trading account to a sizable balance that matches your level of trading confidence. So this video will be about risk management system number 1, where we look at a very, very safe, patient, and conservative approach to risk management, simply using equity, not using options trading, okay? And because this is so safe, it won't be as profitable as, say, with other risk management systems we'll look at down the line. So if you do not like losing money, this is for you, all right? So grab your notebooks and buckle up. Hands and feet is out the right at all times. Let's go lose this money. So by using a combination of trading success and additional fund deposits as your trading confidence grows, this tutorial will focus on using a risk management system to grow your trading account from various starting points to a more substantial balance. Knowing how much money to put into your trading account while you are learning to trade is a challenge that majority of traders face at the start of their trading careers. Learning on the job is undoubtedly a benefit of becoming a successful trader, but there are some traps that many aspiring traders, fall prey to, okay? So it's crucial to keep in mind that only the risk parameters change as your account balance changes, all right? Or your account balance increases. But the trading process stays the same. So beginners often fall into the trap of changing their trading methods when they start to take on more risks, such as taking profits earlier than they would normally, or placing stop losses too close to the entry points, that is necessary to the, to lower dollar risk value. This is personally something that I did, and I had to literally untrain myself from doing so. All right. So I'm trying to provide this to you guys. The secret to becoming a successful trader is changing your mindset to accept that your trade parameters should remain the same as your trade volume increases, despite the fact that your human nature will want to ignore this idea. So for instance, if you began trading with an opening balance of $5,000 and made a 50% net return after 1 year, your account balance would rise to what, 7,500? Now, while this would be a fantastic return on equity and something that you should be very happy with, the truth is that once you were able to generate some positive returns, you would most likely be enticed to increase the balance of the account, even though you may not be mentally prepared to do so. Okay, so as your experience and knowledge of live trading increases, you'll discover that the best way to combat this mistake is to follow a system that allows your account to grow while adjusting the risk in line with it. Okay, the key is to reach trading milestones by only making A+ setup trades and adding extra money to your account at certain levels. And there are two benefits to a system like this. Okay, so first off, by adding extra money to your account as you hit trading milestones, you are enabling your trading balance to grow significantly as you gain experience. You won't be as likely to raise your trading balance to a level you are unable to manage as a result. And then secondly, as you reach these, significant trading, balance milestones, you will be increasing your risk per trade in proportion, which is crucial in helping you become, less sensitive to monetary values. All right. So as an example, if you had a balance of $1,000 in your trading account, your risk per trade would be $10. Now, most conservative traders are, I would say, they're quite comfortable, with this level of dollar risk and it would be unlikely to interfere in their trade, right? The problems occur when the account balance is like $50,000 or more, where you are risking $500, or more per trade. Although the risk is still only 1%, of the account balance, traders who aren't desensitized to looking at a, trade as a dollar value may not be able to cope, with this level of risk, even though, it is correct, relative, to the balance, so as mentioned before, these traders, are more likely to exit trades early, like I did, because they see a good dollar return or hit by stop losses that, are too close to the entry point, to avoid, taking their perceived, big loss, quote unquote. And so all those this does seem logical. Traders who are not mentally prepared to risk $10,000 per trade, will interfere with their trades and possibly ruin what could otherwise be a profitable system. And so always remember, that a take profit and stop loss level on a trade is the same in $1,000 account as it is in $1 million account. Okay. And so by accelerating the growth of the trading account balance in line with the trader's experience, this risk management system aims to condition a trader to adjust their sensitivity to the risk dollar amount. All right. And so let's take a look at how this system functions at the beginner level. Since for the beginner level, it's suggested that a starting balance would be $500, just because you're new and you need to test the waters per se. So it's important to keep in mind that any trade, should I say, executed through the system, again, must be A+ setup trades with a maximum 1% risk per trade, right? And in series 2, dealing with technical analysis, we'll discuss what A+ trades look like, okay? And so the first milestone a trader must reach to increase the funds in their trading account is a trading balance of $525. This would mean that a 5% return has been generated on the initial balance with a max risk of $5 per trade. And so at this point, an additional $75 can be added to the trading account balance to increase it to $600, right? And to increase the amount of money in your trading account, again, a trader needs to pass the second milestone, which is $630. Again, this will indicate that a return of 5% with a maximum risk of $6 per trade was generated. And then the trading balance, can now be increased by another $70, bringing it on to $700. And then thirdly, to increase the account balance, you have to hit the third milestone, which is $735. Once more, this will indicate a 5% return on the initial balance with a $7 max risk per trade, right? And then in order to increase the trading balance to $800 at this point, an additional $65 can be added to the account balance. And then the process is carried out all the way to milestone 20, where the new trading balance for the account will be $5,000, as you can see on the table. And this means that the trader has effectively made over $2,000 in profit and added roughly $2,500 to raise their account from $500 to $5,000. And by doing this, the trader increased the level of risk at every level as the balance of the account increased while staying within the risk parameters, and as a result, became less sensitive to the trade's dollar value. So now that the risk management is no longer a concern, the trader feels confident enough to keep growing this account, right? And so in this scenario, positive trades contributed to about 50% of the trader's income, giving them the assurance that their trading strategy is effective. And as size of the risk increased, the same trading strategy was used throughout the entire process and wasn't changed, basically proving that the model is sustainable. All right. And now for level 2 traders. So Level two traders, you'll start out with a $5,000 balance in your account. Again, it's crucial to keep in mind. It's important to keep in mind that any trades executed with this system must be a plus set of trades with a max risk of 1%. Okay. So a trader, to reach the first milestone, you have to hit $5,250 to increase the amount of money in your trading account. Max risk per trade is $50. And then at this point, a further $2,250 can be added to increase your total to $7,500. Second milestone is $78.75, which indicates a 5% return. Max risk is $75 per trade. And then a further $21.25 can be added, which increases your balance to $10,000. Then the third milestone will be $10.5. Max risk per trade is $100. And then a further $4,500 can now be added to the trading account balance, bringing it to $15,000. And then again, the process, just like in level one, it continues up to milestone 20, where the account's new balance will be $100,000, as you can see on the table. And then again, this effectively means that the trader generated almost $48,000 in gains and added another $47,000 to increase the account from $5,000 to $100,000. Okay. And so remember, guys, this is a very safe and patient and conservative approach of risk management. Although these guidelines, may seem like they're very elongated and boring and straightforward way to build a trading account while learning, those who do so will feel much more confident in their trading skills and have a better understanding of risk management. And so by the time a trader reaches level 20 using the system, they will have steadily increased their risk tolerance over the course of building their account, and they'll also be prepared to handle higher volumes of trades without the anxiety of suffering losses, right? And by the way, if you do like this approach, we do not recommend new traders using this system to start with a balance greater than $5,000, regardless of the trader's ability to fund a trading account from the start. Even if a trader has more funds available, starting with a bigger balance will miss the crucial step of teaching yourself to believe in your abilities and the system. The process in not only this risk management system, but the other risk management system we'll discuss is as much about developing the trader's psychological mindset as it is about, increasing, the account balance. So some people will ask how big a trader can go once milestone 20 is reached, when they have a $100,000 account. And the simple answer to that is begin the process again, if your funds will allow it. All right. If you don't have the financial capacity to meet the balance increases right now, that is okay. All right. So trading with, $500 to $5,000 to $100,000 balance will certainly continue to develop your trading skills and confidence, and in time, the ability to, should I say, make the increments required. Okay. And then remember, you can simply risk 1% of the available balance, which will increase accordingly as the account grows through your trading income. And then by this point, for level 3 traders, these are those who possess, should I say, solid market trading experience and have primarily accumulated their balance through trading gains from level 1 and level 2 using the system. And by this point, these traders would have completed our technical analysis course, which will be dropping soon. So let's look at the risk management system here, starting with 100K. So a trading account balance of 105,000 is the first milestone. Max risk is $1,000 per trade. And then at this point, an additional 5,000 can be added to the account to increase it to 110,000. And then the next milestone would be 115.5. Max risk is 1,100. And then you can increase it by adding 4,500 to the account, bringing the total to 120,000. Third milestone is 126,000. Max risk is 1,200. You can add 4,000, bringing it to $130,000 account. And then this table basically just shows how to proceed up to milestone 20, where the new trading account balance for the account will eventually be $400,000. And so you've increased the account from $100K to $400,000. Okay, only those with the right mindset, the right discipline, and trading experience will be able to become successful traders. Again, this risk management system is for those looking to just hop in and get their feet wet. But there is another system that I personally use, where instead of getting 5% gained from 1% risk, you're getting 20%, 50%, 100%, 500% gains. I'm talking about options trading, baby. but I hate to break it to y'all. For now, we need to put the risk management module on hold till at least the end of the next series, the technical analysis series. Why? Well, the next risk management system or the next risk management videos require you to understand the chart. So from series number 1 of the fundamental analysis portion, we understand how the market works. Now it's time to understand how the charts work. All right. So make sure y'all show us some love, by liking us up, commenting, subscribing, and hitting the notification bell for more. Next is series number 2, the technical analysis series. So be ready for that very soon. I love y'all. From yours truly, Financial Fort.